Hi everybody, it's FIBO Group and you are watching to the Market Watch Review. The sharp decline in U.S. stocks yesterday has slowed the market's appetite for risk. Selling of equities is underway. The regional decline was led by losses of 3.2 to 3.3% in Hong Kong and the index for mainland shares listed there. Stoxx 600 Europe is down 0.65% in late morning turnover. This marks the fourth day of losses. The bias in U.S. futures trading is also lower. The G10 is mixed with the dollar. The G10 is mixed. Sterling and the euro are up 0.3%. However, the Canadian dollar, yen, and Norwegian krone are all down nearly as much. Gold is consolidating near Monday's lows. January WTI continues to lose and is trading down at $72.75 today. This is its lowest level since January's first half. Asian Pacific market. China's trade surplus rose by 15% to $69.8 billion. After a 0.3% drop in October, November saw an 8.7% decline in exports. Imports decreased 10.6% compared to a year earlier. They were down 0.7% in October. Australia's economy expanded 0.6% in the third quarter. After 0.9% growth in the second quarter, Bloomberg's survey showed a median of 0.7%. After reaching $0.6850, the Australian dollar experienced a pivotal reversal Monday. Today, it is losing 0.6670. The US dollar continues to recover against the Japanese yen. The greenback reached 137.85 today after it hit a low point at the end last week, near JPY 133.65. Market of Europe. Germany is not falling into recession, but it is trying to resist. Industrial output was surprised today by yesterday's strong-than-expected factory orders and sharp upward revisions to the September series. Germany's industrial production fell by 0.1%, rather than falling 0.6% according to Bloomberg's survey. The September 0.6% gain was revised up to 1.1%. After falling to $1.044545, the euro is now rebounding. In early European activity, it reached $1.05. Sterling saw some follow-through sales after yesterday's lows. Market of America. Today's U.S. data is more useful for economists than it is for market participants. The GDP figures are used to calculate non-farm productivity, unit labor costs, and other metrics. Also, the U.S. reports October consumer credit. Today is the Bank of Canada's meeting. The market is split between a 25 BP hike or a 50 BP move. The Canadian dollar's weakness may be the deciding factor. Mid-October saw the U.S. dollar peak at CAD 1.3975, but it fell to CAD 1.3225 by mid-November. Since then, however, the Canadian dollar is the weakest among the G10 currencies. The Canadian dollar is still under pressure. The Canadian dollar has reached CAD 1.37, its highest level in a month. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.